used to have two separate teams. One was for the neighborhood team, supporting the neighborhood work, and one was for the cultural outreach work that we do. We're now moving those to blend those together to give better service both to the enterprise as well as to the neighborhood organizations. So some of those changes are also underway. So I just wanted to mention we are taking this forward with your blessing. Some of the changes are underway. There's more yet to come.
Thank you, Mr. Rubador. Are there any questions or comments from the committee? Seeing none, may I have a motion to receive the NCR Neighborhood Programming and Support Internal Audit, direct staff to publish the report, and refer it to City Council with the understanding that it will then go to a dialogue at HECE committee?
So moved.
It's been moved and seconded. All those in favor of this motion, please say aye. Aye.
Aye.
Those opposed? Abstentions? The ayes have it, and the report will be received and staff will publish it. The next item on our agenda is an internal audit report on the Transportation Management Organization. Here again to present is Mr. Tetzel.
Thank you, Madam Chair. The city became aware of allegations of employee misconduct and grant noncompliance or grant evasion, federal grant evasion, from an organization called Move Minneapolis, which was previously known as Commuter Connections. We became aware of this initially through complainant, and then internal audit was pulled in when the Met Council auditor was communicating with our office and trying to get the results of our work and the city finalizing this body of work. Pardon my voice today, I'm a little bit hoarse. To give a little bit of a timeline, Move Minneapolis gets CMAQ grant money. They were founded in 1991 and incorporated in 1992. They were founded through actually city council action, and the objective of the organization is to advocate for sustainable transportation systems and support a growing vital downtown Minneapolis, which the city holds sort of dear to its heart and understands that it's important work that's being done there. When Audit first found out about the allegations through the Met Council auditor, we had some discussions internally to determine how this situation was going to be handled, and I'll explain a little bit of the structure. So Met Council is the direct grant recipient of these grant funds through the Federal Transit Administration, and the city acts as a grant pass-through and passes through these grant funds upon approval to the downtown Minneapolis TMO. And we referred to this organization as the DMTMO in the report. Move Minneapolis is sort of their forward-facing, public-facing organization of that. When the city became aware of the allegations, they hired a local CPA, a regional CPA firm to do some agreed upon procedures to determine the extent of this and to try to validate some of these allegations. And when that work came back, I sat down with the city's controller and the Met Council auditor to talk about the results of that, and that I was also shared some additional information from both parties. In reviewing some of that additional information, and Met Council did a great job of trying to put together a few examples of some of these allegations, it became clear that the work that was originally done at the city's direction by this regional CPA firm would identify some of these issues, but would potentially fail to identify other ones because of the activities that were going on at the DMTMO. We addressed, in this audit, we addressed the grant evasion allegations. The employee misconduct is something that the DMTMO needs to address and has, from what I understand. Their employees don't work for us, and so we don't have any authority to look into those. But it helped paint a picture of sort of what the situation was and how we might do some of this audit work to really figure out what was actually going on.
Mr. Tetzel, don't mean to interrupt you, but just to try to set some of the context and some of the framework, is everybody understanding of how things were set up? Mr. Neal, did you have a question?
No, yeah, I am not actually. Could you describe me? Two questions. One is Met Council. I want to make sure I understand. Met Council contacted you or contacted the city, and the city asked you. Does Met Council not maintain the ability to audit its own subrecipients? That's question one. And second question: what are the actual allegations, or what were they asking about? What were they concerned about? They must have been concerned sufficiently to get people involved, get the city involved to do this audit. Thank you.
Madam Chair, Mr. Neal. Met Council they became aware of the allegations originally when they were provided to the DMTMO, to Met Council, and to the city. And so Met Council was aware of them then. Met Council doesn't have a contractual relationship with the DMTMO because we're the pass-through. So we have a contract with Met Council, and we have a contract with the DMTMO. And so it was really up to us. The obligation was on us to look into these allegations. I can talk about the allegations specifically. I'll try to summarize these. So not following third-party contracting requirements, not engaging in an open process and fraudulently handling money, not having contracts in place with vendors, disguising finances, that the organization's payroll and billing methods were fraudulent, that time off was taken but never submitted, that invoices were backdated, that they were overbilling for services to the grant, they would overbill work and then make donations by subtracting overbilled portions, that they were receiving kickbacks from a vendor, that they withheld and altered many documents to ensure the auditors would not review them, and refused to send the files that the complainant had originally prepared for the audit. And that audit that I'm speaking about is the one that the city engaged a CPA firm to originally do.
Does that answer your question, Mr. Neal? Thank you. Go ahead, Mr. Tetzel.
Sure. So those are the grant evasion sort of allegations there. So I'll get into the findings now in case there's any more, unless there's any more questions about how we got to where we are today.
Well, actually, Mr. Tetzel, one other question. So in the timeline, the city finance engaged a vendor, Baker Tilly, a CPA firm, to do an audit. And as the results of that audit, what other information did you have that led you to proceeding to go further and to do this second, more in-depth audit?
Madam Chair, when the complainant was an employee of the DMTMO, when they resigned and offered up their resignation letter with the allegations of employee misconduct and federal grant compliance evasion, they also collected a lot of information on their work computer and left that computer with the Public Works Department here at the city. So we had this employee's machine with a substantial amount of information on there that we could use to have a more credible source of information in some of the work that we needed to do to validate these allegations.
Thank you, Mr. Tetzel. So that's what then led to this secondary audit and thus these findings.
Correct.
All right, thanks.
Because this was a significant body of work and it was important to get this right, I engaged a cyber forensic analyst and a local investigative firm. Forensically, because electronic evidence is sensitive, and we wanted to make sure that we could get images of computers and not disrupt the business of the DMTMO, to not accidentally delete files, what have you. But there's a lot of things that you can also tell forensically that you can't in just looking at source documents like invoices and payments and accounting files that you would typically ask for in the agreed upon procedures that was originally directed by the city to handle.
Mr. Fisher.
Thank you, Madam Chair. Mr. Tetzel, there's a name reported in your report, Dan McLaughlin, as the executive director. Is he no longer with the city or with the DMT-MO at this point?
Madam Chair, Mr. Fisher, Dan McLaughlin, I believe he is on leave currently.
And if I could ask, Mr. Tetzel, were you able to work with an executive director or staff in preparing your investigation report?
Madam Chair, Mr. Fisher, the DMTMO staff was pretty helpful actually in getting us the information we wanted, as was the executive director. He was reasonably forthcoming. He had rationale and justification for some of the things that he did, and so we didn't have trouble sort of getting in the door and getting some answers. I think the biggest hurdle in this audit was that, and it's one of the findings, so I might as well just go into finding number one. The executive director has two computers, one at the office and then one that he informed us that he uses exclusively at home. The day that I and the forensic analyst and the investigative team went to go and interview the executive director and some of the other team members, the executive director didn't bring his computer in that day. We didn't ask him to. We weren't sure where he had computers or machines or anything. And so we arranged to pick it up the next day. The cyber forensic analyst was going to pick it up the next day, make a forensic copy of it, and get that machine back to the executive director so he could continue with his tasks. His desktop machine was frail. The hard drive failed when we tried to make images of it. We were able to finally do it with some more sophisticated equipment, but his laptop was probably his computer of choice because it was a little more stable than the machine that he had at work. And the first finding really gets to the fact that we discovered that a program called CCleaner was used on the executive director's laptop. And I'll back up a little bit. When I first contacted the chair of the DMTMO and to inform that we were doing this body of work, I let her know because of some of the allegations that I understood there was a risk of document destruction. So I let her know to one, inform the team at Move Minneapolis that we'd be coming in and to arrange for a day that we could have free and full access to people and their computers, that no one destroy anything, that they retain all their records and that they don't delete any files, that they don't shred any documents, that they retain everything that they have. When we showed up that day to do the interviews, we also provided the executive director with multiple copies of a data retention letter describing all the different types of information that they should not be deleting. One, just saying don't delete anything, but examples of things not to delete. We asked him to read over that, and when he had time that day, to provide copies to his staff and have discussions with them about that. The cyber forensic analyst that we used when he did get the laptop from the executive director noticed that the software called CCleaner was used on there to delete documents. CCleaner is a somewhat sophisticated software that's intended to completely erase files from a computer. It's not like putting something in your recycle bin and then the recycle bin flushes it out. It's almost impossible. It's nearly impossible to tell what was deleted. And the caveat to that is it's not impossible to tell that CCleaner was used to delete files. So we were able to tell that over 1,000 files were deleted in the preceding couple days, but mostly the day of the interview and then following day. Because there's no way to tell what was deleted, we can't confirm whether those were personal files, whether they were work files, nothing there. So all that potential evidence is gone. It's missing, and there's no way to get it back. Another component of this first finding is that we discovered that the director was also manipulating invoices that he would get from vendors without the knowledge of the vendor, the city, or Met Council. A lot of times it was to try to clarify some points. They would arrange for discounts on merchandise, and they would alter the invoice to help highlight the fact that a discount was given. So it wasn't overstating these invoices. It was saying, for an example, this was $100, but we got it for $80. And that $20 discount was considered an in-kind donation from the vendor. The problem here is that with grant reimbursement, you only get reimbursed for the money that you expend. You don't get reimbursed for in-kind donations. You don't get reimbursed for donations in general. And so the issue with that is that, one, even though they weren't increasing the value of these invoices from the ones that we looked at, so the ones where we found discrepancies, and how we did that was we selected some of the key vendors that the TMO executive director was working with, contacted them directly, and had a series of questions for them, and then asked for copies from them, source copies of invoices and shipping documents, and so on and so forth. So we were able to, from the source, from these vendors, get copies of what they submitted to the DMTMO, and then compare that to what the DMTMO was submitting to the city for grant reimbursement. Any questions on finding number one?
No, Mr. Tetzel, I understand that isn't in your audit report. The examples of those, is that part of the work papers that are part of this project? And does the board of the downtown TMO get access to that at some point in time?
Madam Chair, yes, the work that the investigative team did was extremely exhaustive, and I took their work and summarized it, and my conclusions are somewhat different, and I guess this is a good time to talk about that. Their job was to substantiate these allegations. My job, I consider, was to do that, but to also, from a contractual relationship, determine where the DMTMO was not adhering to their contractual obligations that they have with the city.
Thank you. I think that's an important distinction. Go ahead.
Madam Chair, the second part of your question, the board, the executive board, will be provided or has been provided copies of the long form report and exhibits. Finding number two, the DMTMO overbilled the CMAQ grant by at least $50,000. And if we consider the bonus, what it was titled on paper, the profit sharing bonuses that they gave employees over the years that we looked at, that would bump it up to $94,000 for services from vendors in order to create donations that were reported as part of the grant's required in-kind matching funds. To give an example of the situation, they had a firm doing monthly bookkeeping services for them, and they would receive a bill for $550 for those monthly services. They would pay $250 to satisfy that invoice with their vendor, but they would charge back and ask for reimbursement for the grant for the $550. So in essence, they're getting more back from the grant, even though it only matches 80% than they expended in the first place. So they were making money off the grant in some of these situations. It's not, I wouldn't say it's extremely complicated to understand how this works, but it's not extremely elementary either. But if you think about a grant and a grant reimbursement, it's for expenses incurred. And so in this situation, to try to make it as obvious as we can, the bookkeeper was basically saying, if you pay me $250, the rest of that value that I provided to you is basically donated because we agree with your cause or for whatever reason, but you don't have to pay that. And we noticed a pattern of a $250 check being paid to this vendor over the entire time that they were providing these services, and a $500 reimbursement or $550 reimbursement submitted to the grant. So the DTMO is receiving this $300 benefit, whether or not the market value of that is $300 or not, and getting reimbursed for 80% of that from the grant. So it's double dipping. It's overbilling. This is in a sense the same idea as those invoice manipulations. These were some of the larger transactions that the DMTMO conducted, and what they would do is the executive director would highlight that the retail value might have been this, but we got a 20% discount, but he would submit for 100% of the costs on that invoice to the grant. In our understanding, and I think it's very reasonable to say that a negotiated price is a negotiated price. And I think the reason that this is fair to say is that you could land at any price with a vendor, even if it was over market value, and say, I'll pay you that, but invoice me for twice as much. Some people wouldn't have a problem with that. And here, that example was used to overbill the grant.
Mr. Tetzel, is it likely that this may have been a misunderstanding on behalf of the staff person whose responsibility it was to deal with this grant, or rather was there willful or intentional manipulation here? And I ask that from the city's standpoint in trying to assess our risk with entering a contract with this organization.
Madam Chair, according to the testimony of the executive director, and I quote, "I'm not an accountant." He's been in this role for several years, and I would say if your job is to work with vendors, run this organization, and they're almost fully funded by the CMAQ grant, to understand the rules of working under this grant. Contractually with the city, he's required to follow all the FTA regulations under these grant rules. And so I would say claiming ignorance of this isn't an excuse. It's just as much not an excuse of not understanding that you can't text when you're driving. It's a rule, it's a law. And if it's your job to adhere to that, then it's your job to adhere to that.
Thank you.
So I can't really form an opinion on whether or not it was intentional. I would almost say the fact that he was altering these invoices to make that more clear in itself, and not telling all the parties that he was working with made it seem like it was done in a deceiving manner.
Thank you. I'm sorry, Mr. Fisher?
Thank you, Madam Chair. Mr. Tetzel, did you see any evidence that this is widespread among the small staff of DMT-MO, or is this, in your opinion, confined to one individual making decisions?
Madam Chair, Mr. Fisher, the executive director was in charge of most of this work administratively, and he was the one that worked with vendors, submitted the grants. There's only a handful of employees at the DMT-MO, and some of them didn't have access to QuickBooks and the resources used to even put this all together. So I would say it's the job of the executive director, and all of these instances that we found and discussed with him, he was the party involved. Another component of finding two, if I may, the DMT-MO was claiming expenses before incurring them. And so this is another grant evasion where to get reimbursed, and I think it's by definition of the term reimbursed, you have to have expended those dollars first. We found instances where they would bill the grant for something, get paid from it, and then start paying some of these expenses. And so they were front-loading expenses as well. Finding number 3 also relates to invoices. They had a practice of backdating invoices so that expenses submitted were included in previous contract periods and within contract periods. So there were times when an invoice, and we saw this through email communications between the executive director and vendors, where he would ask them to backdate an invoice to a different contract year. And he admitted that that was to extract some of that value that was left on the table, that was left over, if you will, from previous grant contract years. There was further justification for it and details and so on and so forth, but really it comes down to that not being in, that's not a generally accepted accounting practice, which is what's required in the contract that we have with the DMT-MO, nor it is a transparent or valid way of accounting for things or working with grant funds. Once a grant year is finished, if you haven't expended money in that year, then you shouldn't be reimbursed for it. The ones that happened within the grant contract year are a little different, and really it's just a guess as to why that was happening. But my guess, if you will, is that potentially vendors were being prepaid, and then when they were invoicing them, the check date could have been days, months, weeks before. The invoice came in when the services were provided or rendered, or the goods provided or services rendered, and then some work had to be done to make those two occur in the same time. And so someone could say, well, can you backdate that invoice so it matches when I actually paid you, because I'm not supposed to pay you in advance for goods or services that you do for this CMAQ grant.
Mr. Tetzel, but the vendors that were being used were allowed by the federal guidelines, and maybe the vendors should have known better, or, I mean, they're...
Madam Chair, from my perspective, I wouldn't put any onus on the vendor. I don't think they're obligated in any way to the FTA grant. They're simply a vendor. I think all of the obligation in complying with the FTA standards and federal grant compliance lies on the DMT-MO.
And Mr. Tetzel, these were all legitimate vendors?
The backdated ones were all legitimate vendors, but we found instances of illegitimate vendors. So there was, well, maybe not illegitimate, but let me explain. There was an an employee of the DMTMO who I think had a sound system, and so they would use that employee's sound system for events and pay him a small fee, and it's probably in market value or below market value. But rather than being transparent about what was going on or getting approval and letting people know, they created invoices, some fictitious business, Big Dog Productions or Big Sound, something to make it look like it was an arms reach transaction. I think where they misstepped was on the bottom of the first invoice. There was a note to make the check payable to that particular employee. We don't question that those services were rendered and that were provided. It's just that the allegations of an open process and how to obtain bids for goods and services was circumvented so much that this is another one of those instances where they weren't following the procurement guidelines set forth. And that was one item that the Baker Tilly report called out. I think the vast majority, if not everything but one of the instances they looked at, the procurement requirements were not followed. The fourth finding, the DMTMO used erroneous payroll methods to overbill staff time submitted under the CMAQ grant. The way that this organization is set up, I think they receive the vast majority of their funding through the CMAQ grant. They do some other activities on the side that they're allowed to use as the match. They are required to get a 20% local match. And how that works is when they submit expenses to the grant, they get reimbursed 80% of it. So they're supposed to have that money to be able to cover that other 20% that they don't get back from the grant. The issue here is that they were submitting 100% of all their payroll costs, except for one employee who worked the front counter. They had a method to back half of his out, but 100% of everyone else's payroll costs to the grant. Now, if you were going out and working on getting this local match, some of the time, the payroll time that you use to do that should be subtracted from your submission for reimbursement. But it never was. In all the years that we looked at, it never was. There's also a definitive geographical boundary that the DMTMO is allowed to work in under this grant, and they were doing great work, but outside of that geographical boundary, but not bifurcating the time that the payroll expense associated with that out of their grant reimbursement.
Mr. Neal?
Madam Chair, Mr. Tetzel, I just want to make sure I understood what you said just a second ago, that in some cases they were submitting costs to be reimbursed, and they would expect to get 80% of what they submitted back, right? But in payroll, are you saying that they were supposed to only submit 80% and then they would get 100% of what they submitted back? Or was it the same as some other expense where they could, where it was permissible for them to submit 100% of what they incurred and they only expect to receive 80% back? Do you understand my question?
Madam Chair, Mr. Neal, let me clarify. When you do work under specific grants like the CMAQ grant, the work that you do for the grant can be charged to the grant, but any work that you do that's not applicable to the grant or is applicable to your obligation to go outside and find that 20% local match shouldn't be charged back to the grant.
Right. Okay.
So if in one pay period, 10% of their time was used to go out to try to generate their 20% local match, then I would expect to see 90% of their total payroll expenses submitted for reimbursement.
And then they could expect to receive 80% of that 90% they submitted.
Correct.
Got it. Okay. Thank you.
Um, there was also this notion that I mentioned earlier of profit sharing. So at the end of each year, or close to, or sometimes a little bit after, the executive director would give a percentage of each person's either salary or for the hourly employees, I'm not sure how that was calculated, an extra monetary sort of bonus, if you will, into their 401k plans. And this was above the 401k match that the employees were given as a part of their typical employment or contracts. There isn't any evidence or documentation to make us believe or understand that this extra amount was extra work done that's related to the grant. It's labeled profit sharing, even though they're a not-for-profit. That might just be the way that the organization that facilitates their 401k labels it. But it's a year-end payment. I believe it was 6%. According to the executive director, it's 6% every year, even if they're running in a deficit. So in our opinion, that didn't seem like it related to work under the CMAQ grant, and therefore should not have been something that they submitted for reimbursement. The total of that over the years was the $40,000 some odd dollars.
Excuse me, Councilmember Quincy.
Thank you, Madam Chair. Getting back to that, Mr. Tetzel, did those actions seemed like a routine kind of thing? It's been organized since 1991, I believe, something like that. So they've been making routine compensation payments to their 401k. Does that require a board action to do that, or is this something that they were doing outside of board approval? Is there anything nefarious about that, or does this have anything to do with the audit itself? It's just an interesting observation, or is it actionable?
Madam Chair, Mr. Quincy, great question. In talking to the executive board and the chair, we asked if they were knowledgeable or aware of this extra 6% put in or around the end of each year that was included in the scope. So the scope of what we looked at was November 2012 through the end of 2015. So, and those were defined by contract periods that we had there. So I didn't go back and look further, but they weren't aware of that. They were a little bit surprised of it, and if I remember correctly, that would be something that they would expect to be put before them for approval. Okay. The regular 401k match was a standard practice, but this extra piece was a bit of a surprise.
Okay, thank you.
You're welcome.
Mr. Tetzel, I have never, ever heard of profit sharing in a nonprofit or in a government entity that might, I've never heard of profit sharing in a nonprofit. I invite my colleagues to weigh in on whether or not that, I've never heard of that. And what you're saying is that that's not common practice and that was a surprise because it wasn't part of the regular payroll as approved by this board, correct?
Madam Chair, correct. When I first found out about this, we were interviewing the executive director, and my question was, if you pay someone 6% every year, and even if you're in a deficit, why not just add that to their normal salary? Because if you do that, then I think it's justifiable. But when you make this lump sum payment that is done in disregard of whether or not you have the money available and then charge it to the grant, it doesn't seem appropriate. In looking at the FTA grant guidelines, it doesn't get that clear in payroll expenses. It's not that black and white. So I think there's some reasonableness that has to be applied in certain situations, and whoever would make that opinion, my guess would be someone that the FTA could make the call on that. But my guess is that it just doesn't add up. It doesn't make sense. It doesn't seem appropriate. I think they have a right. The organization has a right to pay out bonuses, but I think submitting it to the grant just doesn't make sense to me.
Thank you. Mr. Fisher?
Thank you, Madam Chair. I have to admit now that I focused on this a little more, I'm confused by the profit sharing angle to the bonuses. I'm aware of nonprofits doing metric-based performance bonuses, although that's a tough sell as well, since many grants coming to nonprofits specify what it's to be used for. In this case, this organization ran on grants. Now, did it have for-profit businesses as well that where it took in revenue for services rendered or something?
Madam Chair, Mr. Fisher, they have a retail location. They sell Metro passes and they make a small percentage of profit on those that Met Council allows. They sell a very limited amount of merchandise related to like biking and things like that that are sort of in line with their mission. I think the question is, and I don't know if we really concluded on that, was are they buying that merchandise with grant money and then using the profit from that as their match? Because if they were, that might be an issue as well. So they do have a little bit of outside revenue. From what I understand, there was some activity that they did. I don't know if it was related to carpool parking, but they took over some of the facilitation of some of those services and were given a lump sum of money that they have in reserves, and they use those reserves between their reimbursement periods. And so if they don't have the local match, they've historically had enough money in these reserves so that they could make payroll and meet some of their expenses.
Thank you, Mr. Tetzel. Are the bonuses that you saw being paid out over these few years, were they related in any way to the retail revenues then that were being taken up by the organization? I mean, were they really profit sharing based?
Madam Chair, Mr. Fisher, there was no evidence in their submission for reimbursements that this was any different than a normal payroll expense submission. So there wasn't any documentation of what the profit sharing was. It was in some of the submissions. It's actually hard to identify it. You have to sort of look around and see where it actually lies to find it. It's not obvious in there. But I don't think any revenue that they've generated, small revenue they generated, would cover their 20% match and paying these profit sharing bonuses. It's difficult to determine. They use QuickBooks for accounting, but the state in which QuickBooks existed was rather lackluster and would be difficult for someone to sort of recreate transactional history. We saw a lot of, and I think it's in a further finding, but a lot of bookkeeping entries that were changed months later, a lot of checks that were canceled and reissued. So there's all this sort of fuzzy stuff going on in their bookkeeping system that didn't help in any way in trying to reconcile what was actually going on versus what they were claiming in their reimbursements, because there was so much change and so much sort of clutter in there, if you will. There was also an allegation of abuse of vacation and sick time, of people coming in late and leaving early. The coming in late, leaving early, there's no cost beneficial way to really prove that. We did look at the system that they used to book and accrue their vacation, and then compare that to their paychecks files that would show what they used and how that got reflected in their pay. And there were discrepancies there, but we can't tell if someone actually was present or not that day. You could have scheduled or asked for a vacation day, but decided to come in anyway. So there wasn't a way for us to validate that concretely, but wanted to bring it up. The fifth and last finding, and we've touched on it a little bit, is that they failed to follow third-party contracting requirements by not engaging in an open process related to bids and contracts, and also failed to obtain contracts for services that contained the required language under the Federal Transit Administration. We picked 15 vendors to test the contract for. 9 of them had some sort of agreement. None of those had the required language. 4 of them we couldn't find any agreement or contract with, and 1 of them had gone bankrupt, so we weren't able to get to the source of information there. The issues here, they were failing to obtain open bids when they were required, and for when bids weren't required, there's a requirement to document research into some pricing, and the reason for that is to try to hold people accountable to actually getting a fair price or getting a competitive price in the market. There wasn't any documentation of that activity whatsoever. Those are the findings.
Thank you, Mr. Tetzel. Are there any other questions or comments from the committee? Mr. Fisher.
Madam Chair, I have to ask, where will this report go after, I assume that we'll accept it today, but what happens to it at that point?
Mr. Tetzel, did you want to explain what happens with your report and the difference between the work papers and the audit report that the city receives? And then I'll further entertain Mr. Fisher's question.
Sure. Well, like Madam Chair, Mr. Fisher, like any work that we do, there's a significant amount of information that we use to culminate into our audit report, and we did the same thing here. This report will be submitted to the audit committee. The rest of the information that we have will fall under the retention schedules that are required through the city for the audit department.
So, Mr. Fisher, I have some suggestions on the further actions that we take, and I'll look to propose those now unless anybody else has some thoughts or questions. Before I do that, I'd like to thank the audit department for their diligent work on this investigation. They've shown the need for this service in our city and how it looks when it's done well. Here, a complaint was made, a thorough investigation ended up being launched, the public was notified, and action is being taken. The role of audit here ensures our city is vigilant about maintaining the public's trust, and in these cases, shines a light where sometimes there isn't. What can actually go on when something is not monitored in this situation is unfortunately surprising. As the chair of this committee, I feel it's important to share this information with the residents of Minneapolis. So thank you for that work. I know this isn't easy. We're committed to making sure organizations that work with the city are held accountable to ethical and lawful practices. So I hope this serves as a notice to all of our city partners, and we have a number of small partners that have good missions and do good work. But if you do business with the city, make sure your house is in order. We intend to continue investigating these kinds of organizations to ensure professional practices, especially if we have reason to, as we did in this case. The public deserves our best, and I think we intend to see that they get it. From here, it's important that we take action. It's not enough to just unearth the details of what went wrong, as it did here. I'm recommending that this issue be referred to City Council for consideration. I intend to make a motion to dissolve our relationship with Move Minneapolis and to remove city representation from this board. I do believe that the mission of sustainable transit is an important one, and I hope that Move Minneapolis's board can take steps to rectify what went wrong here. It is not our intention for this organization to fail, but the city deserves better. To this end, I've been in conversation with Met Council about its future ability to partner directly with Move Minneapolis. However, it will be their decision on how to move forward with them